All right, let's talk about a real titan of the healthcare world, UnitedHealth Group, or ticker symbol UNH. Now, this company is an absolute giant, and frankly, it can be pretty complex to wrap your head around. So today, we're going to break it all down, piece by piece, to really understand what makes it tick, both the good and the bad, all through the lens of an investor. Let's dive in.
So, here's our game plan. First, we need to get a handle on just how massive this company is. Then, we'll look under the hood at its two-engine business model. After that, we'll see how those engines work together to create this incredible, self-reinforcing flywheel. Of course, we have to talk about the serious risks, and finally, we'll put it all together and figure out the bottom line for anyone thinking about this stock.
Okay, first things first, you really can't overstate the sheer size of UnitedHealth Group. We talk about leaders in an industry, but in a lot of ways, this company practically is the industry. Its scale is just immense. Just look at this number, $400 billion. Let that sink in for a second. That's not just big, it is more than double its next closest competitor. Now, what does that mean in practical terms? It means UNH has this incredible negotiating power and a level of efficiency that smaller players can only dream of.
And if you want to see where that size really matters, look no further than Medicare Advantage. This is the part of the insurance market that's growing the fastest, and UNH has a nearly 30% share of it. That is a dominant position in a market that has this powerful, built-in tailwind from an aging population.
So how in the world does this giant actually work? What's the secret sauce? Well, the best way to get your head around it is to think of UNH as this incredible machine that's powered by two very different but very connected engines. Okay, so engine number one is UnitedHealthcare. This is the side you probably know best, the traditional health insurance business. It's absolutely massive, it's stable, and it throws off a ton of cash. But just as importantly, it collects a mountain of data from its 53 million members. Then you have engine number two, Optum. And this is the really exciting part. It's the high-growth services business, where they do everything from providing direct patient care to managing prescriptions to selling high-tech healthcare solutions. Now here's why that split is so critical for investors. Check out the difference in growth. The insurance side is chugging along at a respectable 6%, but Optum, it's in the fast lane, growing at 12%, literally double the speed. Plus, it's a higher margin business, meaning it's more profitable. This shift toward the Optum engine is really the core of the growth story here. And that brings us to what is, without a doubt, the most important idea you need to understand about this company. It's not just about having two big businesses. It's how they feed each other in this incredible virtuous cycle, what we call a self-reinforcing flywheel.
Let me walk you through how this works, because it's kind of brilliant. It all starts with that river of data flowing in from UnitedHealthcare's 53 million members. Then the Optum analytics engine just chews through all of it. We're talking billions of claims to find smarter, more efficient ways to provide care. Next, Optum's huge team of 90,000 doctors actually uses those insights to manage patient health more proactively. And here's the magic. The results from that better care, healthier patients and lower costs, get fed right back into the insurance side. That lets UnitedHealthcare create better, cheaper plans, which attracts even more members. And the whole cycle starts over bigger and stronger than before.
So what's the big deal? Well, this whole system completely changes the game. UNHO stops being just a passive company that sits around and pays bills after you get sick. Instead, they become an active manager of your health from start to finish. Because they own the data, the analytics, and the doctors, they can influence costs and capture profits at every single step of the process. Now, it sounds like an unstoppable machine, right? Well, not so fast. When you build something this big and this successful, you inevitably paint a giant target on your back. So for any investor, it is absolutely essential to understand the huge risks that come with this kind of dominance. And I want to be really clear here. This isn't just media hype. This quote is pulled directly from the company's own official filings. The Department of Justice is deep into a major antitrust investigation, and they're looking right at that relationship between UnitedHealthcare and Optum. That is a massive legal question mark hanging over the entire company.
And look, the pressure is coming from all sides. You've got regulators asking tough questions about Medicare Advantage payments. You've got that huge DOJ investigation we just mentioned. Lawmakers are going after their pharmacy business. And as we all saw with that massive cyber attack in 2024, when you're the digital backbone of the industry, you're also the #1 target for hackers.
Phew. Okay, so we've seen the incredibly powerful business model, and we've stared into the abyss of some really formidable risks. So let's bring it all home.
What does this all mean for shareholder value? This is the key puzzle for any investor, right? With all this regulatory heat, you'd think the stock would be trading at a discount. But for years, the market has given UNH a premium price tag compared to its peers. So, why?
The answer, in one word, is Optum. Wall Street gives UNH a higher valuation, a better price-to-earnings ratio than a classic insurer like Elevance because of that integrated model. Investors are basically paying up for access to Optum's faster growth and higher profits. That's the secret weapon that its rivals just don't have at the same scale.
And that premium valuation is really a bet on this number right here. Management is telling Wall Street that they believe they can grow their earnings per share between 13 and 16% every single year over the long run. For a company this huge, that is an incredibly ambitious target.
So how do they possibly plan to hit a number like that? Well, they've got a four-part playbook. They push for growth in both the insurance and services businesses. They use their enormous cash flow to buy other companies to make Optum even bigger. And, super important for investors, they return a ton of that cash back to shareholders through a dividend that keeps going up and by buying back billions of dollars of their own stock.
And so this is what it all comes down to. This is the central tension for anyone looking at UnitedHealth Group. On one hand, you have this incredibly powerful, self-sustaining flywheel pushing the company forward. But on the other, you have the massive gravitational pull of regulatory risk trying to slow it down. The whole investment thesis, the entire future of the stock, really rests on one simple question: which of those two forces is going to win?